Welcome to Copytraders Club, where you can learn how to make more money copy trading. I am Gavin Macaulay, my name and username on eToro. You can continue the conversation on Discord and Facebook. We're now beginning a ratio of 3 chat episodes to every 1 solo episode, and today we have a PI chat with someone who is indicative of the rise of the professional investor on eToro. A most European gent from the fund management world embracing the future. Here we go. Episode 17 of Copytraders Club, and today, arriving at the Copytraders Clubhouse, is a PI who exudes the aura of a money manager from his cravat to his cufflinks. He even has Lux in his username. It's Marcin Jasinski, aka MJ Lux. And here he comes. Marcin, hello. Welcome to Copytraders Club.
Hi, Gavin. Hello, everyone.
Well, it's great to have you. And as you may know, to clear reception and gain access to the VIP lounge, you need to answer a series of quickfire questions. Are you ready for those?
Absolutely.
Username on eToro.
MJ Lux.
Date you joined eToro.
March 2020.
Year of birth.
87.
Place of residence.
Luxembourg.
Profession.
Investor and CEO advisor.
Briefly state what you aim to achieve on eToro.
30 million asset under management.
Name one of your investing heroes.
Ray Dalio.
Name one of your favorite investing books.
Probably say Principles by Ray Dalio as well.
That completes the formalities. Let's proceed into our VIP section here at the Clubhouse. Splendid Copytraders Lounge. MJ_Lux, aka Marcin Jasinski. Are you ready for this magical transition?
Absolutely, let's do this.
So here we are, Marcin, in the magnificent Copytraders Lounge. I've seen from your videos that you're accustomed to some pretty grand settings. Stately homes, a balcony overlooking a sunny beach, a marina full of yachts, and so on. But right now I can see it in your face that even you are impressed with the opulence of this clubhouse.
It's phenomenal. Thanks for the invitation.
Okay, so let's talk about how I came across you. Your name was suggested to me in the comments section of one of the YouTube versions of this podcast. So thanks to Manuel Matos, I believe it's pronounced. I think he's Portuguese. See, listener, what a little bit of participation can do. Speaking of nationalities, what nationality are you, Marcin?
I'm actually Polish.
And you're in Luxembourg.
Yes, I have been in Luxembourg for the last 10 years.
And why Luxembourg?
Well, you may or may not know it, but Luxembourg is actually the second biggest fund industry in the world, about $4 trillion of asset under management. So it's second only to New York. I used to work in the fund industry and hence I'm in Luxembourg.
You like to golf? I spotted your Strixon golf bag, big fat Strixon bag in the background of some of your videos. What handicap do you play off?
It's a Grand Tourer. I'm actually just applying for the handicap right now. So I'm not a professional player, but spend the last 2 months in playing golf in Barcelona almost every day.
Oh, I thought you were going to tell me you were single figures.
Not yet. Hopefully there soon.
Well, I also noticed on your website there is a series of references, and one of them mentions that you're a man of sporting endeavor and you understand the rules of fair play and so forth.
Yes, I played semi-competitively. I played basketball when I was younger. It's actually going quite well. So funnily enough, my initials are MJ, and that's where MJ is really coming from the basketball court.
Okay. Well, you're also a rising star in eToro. And to me, you're a good example of the rise of the professional investor in eToro. The likes of you and Campervans and obviously the old hand of Yeppe and an increasing number of others have the look and feel of professional fund managers. You know, in an industry that's traditionally enjoyed a wall of obfuscation between them and their clients, lengthy contracts and impenetrable fee structures and so on. But you're stepping into the world of open source fund managing in eToro. Is this a sign that you recognize things are moving from one to the other?
Absolutely. I think the full transparency of everything we do as popular investors and also those who are not is very interesting. And it's a huge advantage to the end user or the consumer or the copy trader. So having your fund fully transparent every move in real time is something new, very new. Usually you would have a 3 month delay to disclose your holding. I look at it as a democratization of professional fund management.
Let's talk for a moment about Sartorial Elegance. You're always very well turned out. Every time I've seen you in your videos on YouTube or eToro feed, either in a suit or a smart jacket, sometimes with a matching cravat and handkerchief in your breast pocket. Do you make an extra effort for your videos, or are you generally a sharply dressed man?
I guess I generally am. I think, once you lived in Paris, you have a certain reputation to uphold. So I lived in Paris before coming to Luxembourg, and it just stayed with me. That's something that I'm actually missing because we are going a little bit more towards. I have an eToro T-shirt as well that they send me, and but I quite enjoy being, sharply dressed and attending those functions. I miss that a little bit in the kind of freelancer and digital nomad lifestyle. So it's, if I have an occasion, I'll come back to 100 or so ties collected.
Well, right now we're connected by video and you're wearing a suit at the moment. So I can't really picture you lying on a sofa in a pizza stained onesie. Not in keeping with your sense of style.
No, I would much prefer a lounge like this one. Opulent is a good word.
Okay, let's have a question from the art of people. Can you give me a number between 1 and 10?
Let's go for 8.
Other than a member of your family, tell me about your role model.
Very interesting. I should probably say Michael Jordan for the purpose of this podcast, and not just because of his fame and success. I think he's inspirational because of the amount of work that he put. He was always the first and the last one to leave the basketball court. He worked extremely hard, even when he played baseball or golf, whatever he did. Extremely competitive, even to the point where he was alienating other people. And you have this great documentary called The Last Dance on Netflix, I believe, about him, and I think it puts his career in a new light. And I'm quite competitive, and obviously my initials kind of oblige me to aspire there. But he's really an inspirational figure, and how he dominated the game was quite something.
Okay, Marcin, now let's move on to your bio. Normally, I ask guests to read their bios through. However, I think we have to make an exception for yours to make sure that I, and therefore the listener, have a chance of absorbing all this information. So I'm going to stop you after the first section just to explore 1 or 2 points. So if you would like to read the background.
Sure. 17 plus years on the buy side of financial services, fund asset investment and wealth management, double first class in business and Harvard HBX online course in disruptive strategy, expertise in Thomson Reuters, Bloomberg, and Lieber.
So 17 plus years in financial services. And I worked out you're 33 now.
That's right.
So you've been involved in financial services since you were 16. Was it in the family?
Yeah, I actually opened a brokerage account when I was 16, made 158% the first year. And as a 16-year-old, I actually ended up managing money of my family, extended family, my entrepreneurship professor, and another big real estate firm. So that's how I started.
And where did the interest come from at such a young age?
It was just natural. I was really into sports and then into French at the young age, but it was just very natural for me to go on the market and analyze companies. It's always been there, really.
So you mentioned French there. You say you have a double first class honor, so that's in two different subjects, business and French, correct?
Correct.
And what university was that at? Was that in Poland?
No, that was actually in the UK.
And then you did an online Harvard course in disruptive strategy. So you weren't walking around the hallowed halls in Boston, in that great institute of learning.
Sure, I've been there planning my MBA, but actually when I found that this course was already executive, and I kind of reached my goals after MBA without an MBA, so I didn't end up going, but I thought this was really useful. It's actually with Professor Clayton Christensen live. May he rest in peace. He's the guy behind Innovator's Dilemma. So we really learned a lot about disruptive technologies and strategies and how new entrants can disrupt existing markets. So I actually learned much more than I expected. So that was great.
Yeah, that sounds like a very informative course.
And what was great is practical. You can actually use the framework that you learn and you can apply them on the real business situation. So that's been really, really helpful.
So you're a full-time investor and CEO advisor, management consultant.
Correct.
Can you estimate what proportion of your time is dedicated to eToro?
Sure. It's probably about 95%. I occasionally take some clients, but increasingly this will be hourly consultations, few hours of strategy work. I also sit on the board of a change management program where I assess who passes or fails the certification. So that's not a lot of work. I just look at few assessments here and there and decide who gets the certification. So I do few things like this, but occasionally I also consult for hedge funds or private equity or investment banks, where they basically pick up my brain, and it's a nice hourly rate. So I accept it, and what's good about it is that it keeps me sharp. I don't want to go totally outside of these industries because I always need to be prepared. I always need to know what's happening, especially in the industries that I worked for, and I don't want to just have this ivory tower view behind my Bloomberg and Reuters. I like to be a little bit involved as well.
I've been watching some of your videos, and your recent videos in May have been saying that there have been some red periods recently, but now is a great time to start the copy because you expect things to go up from here. And also that you lost quite a few copiers due to recent red. No surprise there. Unfortunately, we copy traders seem to be very fickle creatures. How are you coping with that?
To be perfectly honest, it's quite frustrating because I'm quite unaccustomed to red. I try to be green regardless of the market performance. So even this month, I'm around zero, whereas the markets are bleeding quite badly. I think I built a core group of copiers, probably about 1,500, and I got a bit of a spike when I was in Editor's Choice. And I think most of those people left because they actually joined probably around February. And since then, we had a drawdown. So people who join and read and they've never experienced green, I think they're quite impatient and they just leave.
Yeah, I see that a lot. People chase after top performers who've really done well in the very recent past. And then very quickly, if things don't go the same way, they're off.
Exactly. And it's quite ironic, really, because me being in the red for 3 months, I mean, these are 2 to 3, 4%, and about 1% now. The last few months, it's actually a great opportunity. It's maybe counterintuitive, but having the fact that my portfolio is a little bit on sale, it creates a better entry point for some people. So you would see that I made 26% in November, 20% in January. So we're probably preparing for another very strong month. So it would be quite wise to join when we are in the red.
Buy the dip in Marcin.
You can say that.
Okay, now the next bit of the bio is your strategy. To prepare for this, I had to do some research and take some notes. So possibly the best way to discuss this is if I quickly run through those and you can build on it.
Fantastic. Yep.
There's two elements that you list here. You say, my investment strategy is proprietary and involves a synergy of F-score, brackets, improved value investing, close brackets, and Black Litterman model, brackets, improved MPT, close brackets. So the F-score is the Piotrowski F-score, which is a discrete score between 0 and 9, used to determine the strength of a firm's financial position. It's used as a metric to judge value stocks and considers these three elements. Number 1, profitability. Number 2, leverage, liquidity, and source of funds. And number 3, operating efficiency. So that's the F-score. The Black Litterman model is an analytical tool to optimize asset allocation according to risk tolerance. Are those good definitions? And what else would you like to add to that?
Sure, these are pretty good, Gavin. So what's important is that the Piotrowski model, the F-score, it goes through the books basically. So that's where I graduated in business. I done finance all my career. So what we always do, we just go to the books and see the ratios. Especially now, this was extremely important because COVID, created a risk for sustainability of some businesses. So you need to go to the books and see, how much cash the company has, how liquid they are, what are their, credit default, what are their obligations, can they sustain the burning the cash, and so on and so forth. So this is where I always look at, and I always select strong businesses, and I like those that are relatively more undervalued, but also very, very strong. That's what is important in terms of value investing. And then the Black Litterman model is very, very interesting. I mean, it's a bit dated. It was created in 92 at Goldman Sachs. But it's a fantastic model because it takes model portfolio theory where I find myself very strongly, in terms of the diversification. But it also takes those future gains and kind of your own assessment on the company, not only historical values. So that's the differentiator. So, when I analyze everything few years back, then I can put on my own assessment, which is consistent with Black Litterman model, to see where the company is going, and it's a little bit more efficient. So combining these two, I think, I really am able to touch on very, very important fundamental elements of each company. And I think it's a pretty good model. And it took me many, many months to build it on some of the most powerful tools that exist in finance. And I think I've created something that's really sustainable. So I'm here to stay.
And you also say that it's proprietary. What do you mean by that?
I mean that I'm not using, so for instance, there would be a value investor badge on eToro. I'm not really interested in that because I've created something on my own, and I'm not really willing to share it the way it's built, because I think I have an edge and I want to keep it that way. So that's why it's proprietary.
Is there anything protected about it?
Well, in a sense, the screen that I have above me, these are the screens that I've created. So in a sense, only the people providing me the data would be able to see those screens. But yes, I mean, in a sense, I've built them and I would never share them. So you would have to hack my computer and hack my access to Reuters to be able to see it. I wouldn't say, it's not a holy grail that allows me to make 20% a month every 3 months, but it's something that kind of aggregates and condenses all my analysis into a real-time screen. That's very important. It's real-time. My analysis is very timely, and because of this data providers, I'm able to so I wouldn't go on Google research and Yahoo Finance and find something. It's much, much more advanced than that. And I think that, gives me an edge. And for me, it's very important because I'm managing a substantial amount of funds on my own. And so I want to create something that gives me confidence and it's sustainable, replicable. And a lot of investments that I make, I'm close to 100% sure that I will not lose the money, which is a great feeling for me.
Let's talk about the risk score. Your risk score is, let's say, just under 6. I know risk management is something you often say is very important to you. You talk about risk-adjusted returns a lot. The first rule of Copytraders Club is that risk means max risk. Average risk is of less importance. Do you think your risk score on eToro is fair?
That's a great question. I'm a very positive person, so I don't like to focus on the negatives. But in terms of the risk score, I don't fully agree with the representation that I have, especially that I would invest in India, in Brazil. I have a lot of stocks in Europe. I have almost all industries. I have medical marijuana, solar stocks. So I'm extremely well diversified, and getting close to 6, I'm not agreeing with that. I mean, that's the reality of eToro and what I have to work with. What you see between maybe January or maybe between November and January, you would see risk score of 4 and all these green bars. And even January was risk score of 3. I think I'm a risk score of 4, and let's say the intention is also to come back to that level. I am not willing to just play the visual numbers and hold cash just to have a nicer bar. That's not what I'm into. But I intend to perhaps short more and hopefully come back to 4. So at the moment, I'm quite bullish, and I think we have a lot of opportunities on the market. So I prefer to be a little bit more long equity than I usually am. But I will come back to shorts, and I think this will reduce the score.
Shorting will reduce your risk score?
It should, because it creates inverse correlation. So let's say you are long on pharma stocks, but then you short Moderna. That's a protection. If all of them go down, at least you make money on the short of Moderna. Again, I think the risk score needs a little bit of work. I've also seen that cryptocurrencies reduced the score lately, which I fundamentally violently disagree with. And we had an example of it yesterday. So someone with risk score of 4 or 5 losing 45% on a day. I think that speaks for itself. So I would like this to be a little bit more improved, but I have to work with what I have to work. And I'm for having a maximum score to protect copiers. I think that's a fantastic idea, but I think it could be a little bit more advanced.
Speaking of copiers, let's talk about your copier numbers. As at the time of recording, 1,471 copiers and assets under management between 2 and 5 million. And as we can see, the copiers have been trailing off the past few months, as we discussed earlier. Trades per week, 41.86 trades per week, and average holding time 1 month. I wasn't expecting quite so many trades per week, to be honest. Explain that.
Yes, sure. I actually opened a lot of smaller positions when I started, and I found it to be to a big advantage of eToro that you can open a smaller position and not pay a commission, which is one of the very few brokers that allows that. The reason it's interesting is that you can manage stop losses and take profits in a very interesting way, because if you have one position, then you can only have one take profit, whereas if you maybe divide it into 4, you can take profit at different levels. Which is a little bit better. I moved away from it because it's not so good for the copiers. So I actually started opening bigger positions so people can copy As I said, I manage quite a substantial amount of money, so I focused on opening trades close to 1% and more. So it's replicated for my copiers. I rebalance very often. What I mean here is, I told you about my methodology. Stocks are moving all the time. And if I find something, let's say, with a similar return but lower risk, I would rebalance into that more. So I will probably take profit with some of the positions that I already have grown a little bit more, and I would reposition it into something with similar return perspective, but with lower risk. And I do it very actively. So that generates a lot of trades.
I was thinking about this recently, trade frequency, and it occurs to me that perhaps copiers, generally speaking, like to see frequent trading from their PI. Rightly or wrongly, it gives them a sense that things are happening. I noticed quite a few PIs recently who are more sort of long-term value investor types getting a lot of abuse from their copiers who say, what the heck's going on? You don't seem to be doing anything. And the PI is sitting there thinking, well, it's not a movie, I've invested, I've taken my position, it's yet to play out. What do you want me to do? But there are other PIs who may be long-term investors, but they're still active continuously. And I wonder, does that appeal to copiers? Do you think that's something that copiers like to see?
Well, it's a great question. To be honest, I would like to know the answer to that question myself, from the copier's perspective. One thing for sure, I'm trading almost as frequently as Jay Nemezis, that you told me you'll be interviewing Jay as well. He's number one on eToro. He's maybe making more swing trades. I'm more into rebalancing and repositioning because I always have this risk return in mind. But I do think that you need to be, as a popular investor, it's your job to be somewhat active. You don't want to be too active that you actually lose everything on the spread. You need to know what you're doing. However, opening a long position in Tesla and holding it for 4 years, I don't see a benefit of copying someone. You can do it on your own. And then this is something that we've discussed quite a lot with my copiers. It's a sign of respect, I guess, as well. But there's a lot of people who copy my ideas. And I learned the extent of it and was quite surprised. But they almost never are able to replicate the performance just because I do it actively, and it's impossible to keep track of all of it. One example would be me taking profit from Transenterix at 6.52, and it's trading below 2 again. Most of the people who replicated the trade, they didn't do anything. They missed the opportunity. So I think it's important because the markets are always changing. And also I'm quite, well, I wouldn't say proud because I hate red, but if you see my red months, it's 2%, not 10 or 15. And that usually requires active management. If you are seeing a rapidly deteriorating situation on the market, you should act, you should cut losses, you should open hedges. And if you don't, I think it's your job to do that. If you don't do it, then I don't see the appeal of, people can do it on their own or buy an index fund if they want a passive long-term investment.
So let's speak a little bit more about your portfolio and your investing style. You have a long-short strategy, 20 to 50 stocks, basically 90% stocks, 10% ETFs, and a thin sliver of crypto. You aim to make risk-adjusted returns, so you're not a boom and bust investor, as you were just saying. And you also like to keep somewhere between 10 and 30% cash to maximize swing trading opportunities, or to maximize opportunities, perhaps we should say.
Mm-hmm.
So you're fully funded, no need to add funds?
Yes, no need to add funds, and it's been like this almost since day one. So I actually have not been making any deposits, which I think is great for my copiers.
Absolutely.
Because their performance is replicated with mine. And it's also, I'm not trying to game the numbers in the bad month, to add more fuel and buy the dip. This portfolio is really to provide a risk-adjusted return to my copiers long term.
In one video, you say you have copiers with 50 to 100K invested with you. And you also say, quotes, but there are people who want to put some millions there. And you're ready, willing, and able to manage that. Somewhere else, you mention a copier with 500K. So you have some copiers of high net worth, clearly. And I get the impression you move around Europe, shaking lots of hands and talking to all your contacts. And is that part of your strategy to bring in wealthier copiers from outside the eToro system?
Sure, absolutely. I actually am really grateful for eToro to provide this platform, because I've been into wealth management and investment management all my career. And in the past, you would have to have a power of attorney and log to all of those brokerage accounts and make trades manually. At this time, I can just manage my own portfolio and everyone can join. So I actually regroup everyone to join eToro, having kind of tested it on bigger numbers as well and bigger withdrawals and so on. So I know it's safe. It really provides me this platform that I can do what I do best, and everyone is there. They can read the posts. So it's a completely different, world to having all these different calls from different people and managing different brokerage accounts. So actually, that's why I'm also now in Luxembourg. With this year, I really want to focus on fundraising. That's how we call building the asset under management, and actually have a probably dinner tomorrow or something with the client in the millions. And why not? To me, it's all a percentage game. So whether if someone can put 1,000 or 10,000, if someone can put 2 million, the result is the same. It's all relative in percentages. So yes, actually, I would like to do that much more with eToro as well. We sponsor AS Monaco Football Club. Why not go there and shake some hands and explain what we do? I think it's great what we do. The results speak for themselves. So it's quite easy to see what you can expect. And I would like to do that more.
Who sponsors AS Monaco?
eToro.
Oh, really? I didn't know that.
It's actually a very good video they recently did in French, because Monaco is a French-speaking country. And eToro is actually sponsoring, I think, about 14 football clubs. It's quite active.
Well, it would certainly be a good place to go and shake some hands.
Sure.
Send you down there with your Panama hat on and pair of shades, sit on a yacht.
I've done business there for many years. It's a great place.
So your biggest three positions are all UK listings. You mentioned earlier your geographical spread, unless things have changed since I took these notes. Royal Dutch Shell, Aston Martin and Kia Group. And then TAN, the solar ETF, which is for some reason down quite a lot. Baidu, Upwork. It's a very interesting and varied portfolio you've got. Aston Martin was mentioned there. That was a big winner for you quite early on, I believe. How did you identify that opportunity, and why did the market misprice it so much?
What a great question. I'm quite well known because of Aston Martin and Porsche investments last year, and then TRXC and BNGO as well. But Aston was a classic type of investment that I do. Actually, I shorted that from 283 to 83. That was my first trade in Aston, which just shows that I'm all about, price and valuation, and not emotional attachment to a business. Like, I love Apple, but never had a share of Apple because I see other opportunities. Long story short, I was able to find the brand value of Aston Martin. I was global head of marketing before I went independent. And I found that the brand value is about 4 to 5 billion pounds. And the stock was trading 600 million. So in my mind, there were a lot of people like Lawrence Stroll, billionaires in this world, who would be interested in buying a company such as Aston Martin for 600 million. If I had few billion, I would be interested in doing so. So that was the reasoning. And I even used a phrase that I know some of my mentees are using. I said that if you burn all the cars of Aston Martin and start selling t-shirts, you're worth 5 billion, because that's what brand value is basically. I actually had a very interesting conversation with one of the biggest art gallery owners in Europe. She's actually British but lives close to Monaco, and she asked me, if you're such a smart cookie, why don't other people see that? And I just basically told her, usually when I discuss with people, we don't go into complex portfolio management unless they're my client, but they're always interested in one stock that they can buy. And that was Aston Martin for me for some time. And she said it was either the most interesting or the worst conversation I had this year. And I don't know if she bought, but I think they probably bought quite a lot. So now when I travel back to some places, when I made my statements, people seem to be very cheerful. So that's good.
And you say you'll be posting an Instagram pic of yourself one day with your Aston Martin. Has that happened yet?
That's in the process. I've tested the DB11. It's an amazing machine, but I'm quite interested in some of the DB9 and Vantage. So that hopefully will happen probably next year.
Hope you're enjoying today's show. I'm sure you've subscribed already. If you are a successful copy trader, happy to share what you've learned, there's no need to have a public profile. Get in touch. The bigger the club, the better for you. So tell people on eToro about this show. Ask your PIs to come on. That way you will get to know them better. We build this club together. Now, the second rule of Copy Traders Club is that we can't mention a big winner without mentioning a big loser. So you had a double-digit loss in September. Tell us about the cause of that and what lessons were learned from it.
Nicely put, double digit. It's the first double digit out there. It sounds really bad. Well, Corbus happened. Corbus Pharmaceutical. It's actually a company in the biopharma stock, and I had a pretty big exposure to it, which was going nicely. But then one day, the Fed decided not to proceed with its leading drug out of nowhere. I mean, these are always like this. You cannot know. They don't tell you, we'll tell you on this date. That would be a bit too easy. And the stock went 73% down. And so it made, I think, 5%. I don't know what's my max thrown down, but it's that 5% on a day. That was not a good feeling. So that's the lesson learned is definitely don't put a lot in a pharma stock, even if it looks very, very good. And if you do, even if Atenex also went down, even if it has many drugs in the pipeline, the market is very unforgiving if the Fed is not giving green light for, it can basically stop the production and commercialization of your drug if you're not in phase 3. That was a lesson learned.
And what the market reacts like in a binary way to a pharma company, depending on the success or failure of its latest great hope.
Absolutely. It's a very unforgiving industry. So if your drugs are not coming to the phase 3, the stock market will tank and a lot in a day. So it's one of the most difficult, one of the biggest risk reward out there. So I think if you are into these, make sure you spread your risk among few companies. Don't just bet on one.
Okay, speaking of risk, I see the name Nicola, surprisingly, puts in an appearance. You opened a position on the 20th of April, 2021. It might help the listener get inside your mind if I ask, what's the thesis there?
Mm-hmm.
Now, I checked the history, and you had a couple of short-term positions in 2021 that closed on the 20th of April in the red. Now you've opened another. So give us the Nicola pitch.
It's a tough one. I get asked about it quite a lot because it's a different one in the portfolio, if you will. And I made a good amount of return last year on it as well, selling in the 30s, if I remember correctly. This is a different investment style than most of my stocks, but basically it's a disproportional risk reward. So Nikola trading at 10 and possibly going back to 90, it's a 9x, whereas going to 0 is just, 2x down. And it's something that it's close to Black Litterman model, a little bit more difficult to explain in a very fancy financial terminology. But if I put it very simply, if I take two companies that will likely double, if one of them doubles and the other one goes bankrupt, you're already in plus because it's probably 101%. So you've already made 1% on that trade. That's how I also like to spread the risk. I mean, the algorithm of eToro is not taking that into account. But if I find 5 or 7 companies like this, and many of them likely to double or triple, those that will work will largely provide an really, really good return, versus some of them will not work, but that's perfectly fine. They're not meant to work, all of them. I feel very strongly about that. I don't know if there's a better way to explain this, but if I see two companies that will likely more than double, I'm quite happy to take small positions in both. And let's see if it's going to work. So Nikola, I think it's been number 2 for some time after Tesla. Biden is putting a lot of funds into EV market. Okay, Nikola has some issues with CEO and not maybe some kind of ethical issues in terms of what's happening there. Hard for me to speculate. But, GM was looking at acquiring them. And I think if Apple were to acquire them or some company like this, they have many years of working on EVs. That's first and foremost. And more recently, that I reopened the position, they've actually signed very important deals with dealerships to actually commercialize the vehicles and help produce the vehicles as well. So lately, we've had amazing news for Nikola, but it's a risky stock.
That's very interesting. I thought Nikola's name would live in infamy as the EV stock that creates EVs that only travel downhill.
Sure. I mean, again, I think Nikola per se maybe it's not so interesting, but I was also, when I looked at the investment, especially last year, I learned that they are producing EV on the water, so you could have an electric vehicle, swimming and things like this. So I think just the fact that it's such a new industry, I would not, from what I learned in business and consulting, this is a very interesting potential acquisition target. So again, Apple has so much cash. If they were to buy them, they would benefit from the know-how that they developed. Also, all the bad things they did, it's actually a valuable lesson in a new industry. So if I were Apple, I would be quite interested in acquiring a company like Nikola to accelerate my play in the EV market.
Speaking of spreading the risk, would you like to run your eye down through your portfolio and talk us through what different regions you're invested in the world? Because there's quite a spread.
Absolutely. And that's why also when I refer to risk, I would probably give myself 4, because you would see actually that I invest a lot in the UK, which for me at the moment is the most undervalued market out there, practically in the world. And, we have had Brexit worries, and the COVID situation in the UK has not been managed in a perfect way. But again, London will be there, and there are a lot of companies that trade and operate very globally. A company like Aston Martin, they don't just sell cars in the UK. The biggest group is actually in Asia, and so it's a very, very global business. So just because it's listed in London, it's largely undervalued because it's still at half of its brand value. If it was traded in the US, I think it would be 5 times more. because I think it's worth about 10 billion right now. So for me, this is a great opportunity, even though you can say it's very difficult to time. It's quite frustrating to sit on those undervalued assets and they don't really go up quickly. But for me, it's more important to buy them at the level where they are very undervalued. And I know that one day they will pop up. That's why also I have 48 instruments, because every day a different one, is proven correct. So therefore I can afford to have some of them sitting there to consolidate for some time, because having 48 instruments, every one is popping at different time. So I can afford to have some of them consolidating for some time.
So yeah, as I said, your top few are in the UK. Carry on, why don't you?
Yes, it's also because of risk. So I've noticed that everything I'm adding outside of US is not adding so much to my risk, which you can see in your portfolio and risk section. So I prefer to take some very interesting stocks in the UK that will likely grow massively, but they don't add so much to the risk. Then you will see that I have Baidu, which is extremely undervalued Chinese stock. I have some growth, practically my only growth that I always been buying, or since last year, has been Peloton. And I also build Upwork. These are two businesses that I believe extremely strongly about. So these are more like Apple plays. I think this will stay and be there forever and just grow in strength, because I think they are revolutionizing their industries. But they add quite a bit to the risk. Then I have the TAN ETF, which is a funny name for solar stocks, and I've been actually quite bearish, and I've had shorts on the solar stocks because they went massively up. But if you look at the price of TAN, it's very, very cheap now. It's below 80, I think, and it has been trading at 120, and I'm pretty sure it will come back that way. So, having an ETF there, it's already at 6% up, so that's quite nice. Then you have also some pharma stocks. You have some ETFs. I have quite a lot of India, 2.5%, and 2.2% of Brazil via an ETF. These would also be markets where I would be quite happy to trade individual stocks. At the moment, we don't have them on eToro, but these are two markets that I believe strongly about. I have Bradesco as well, which is a great bank in Brazil. I have BRF, that's also in Brazil. And then I have quite a few smaller companies, but as you will see, they're around 1%. So I'm not exaggerating with them, even though I believe they will grow massively. One of my favorite companies at the moment is Iro, and I bought this on my private account, and I made 20% in 2 days already with quite a large sum. So I would like to actually take a little bit more risk. So maybe in the future, I will have bigger shorts sitting somewhere at risk for 4, and then take a bigger advantage of even companies like Iro that would now explode my risk completely, so I cannot take a big position.
I see that you like ESG and diversity on the board, you say. Ørsted you describe as the most sustainable company in the world. Tell us a little bit about Ørsted.
Well, Ørsted has been one of the leading clean energy companies out there for a long time. They are also one of the leading companies in LGBT movement. They have very diversified board. I happen to know their global head of talent because we used to work together at Thomson Reuters, and he reached a top position in HR at Reuters, and he's leading talent efforts for Ørsted globally. So I have him on LinkedIn and see his post, and the company is just very, very active in charity, diversity, and so on and so forth. And obviously they are one of the biggest ones in the clean energy space. And they've actually inspired a lot of companies in that space to kind of follow their lead. So I have direct exposure to Ørsted, and I also have TAN ETF. And in terms of diversity, for instance, the Upwork and Peloton, which are kind of the only really big growth in my portfolio. They also are very diversified. So actually, the CEO of Upwork is a woman, and head of marketing for Peloton is a black woman. And historically, I've led teams of up to 2,500 people, and I can tell you that what they say is true. The diversity is your strength, and if you can harness that, it's very, very good. So for me, it's not the only metric. I know Jay is also very big on kind of ethical businesses, and I have a ESG score for all my companies. So if I have two companies that are similar, I will take the one that's has a higher ESG score.
I think you would define yourself as a long-term value investor. The way eToro is set up, does it encourage a shorter-term time horizon?
Great question. I think it's not the platform to do day trading or short term, mainly because of liquidity issues. eToro is not the biggest broker in the world, and some of the, especially stocks, especially smaller cap stocks, or very volatile stocks. Sometimes the market is closed, and if you see the comments on the feed, people get very frustrated. And it's not because eToro wants to close it or is against you. It's because of liquidity. A Goldman Sachs will be closer to that position before eToro is able to trade. So for these reasons, I would think that day trading and short-term trading would be quite frustrating.
But the question I'm asking really is whether you feel that the demands of eToro and being a popular investor require you to adopt a shorter time horizon than you might otherwise do.
Okay, all right. I think that for some copiers, yes, because some copiers really are after a quick buck and very quick return. For copiers who stay longer term, I don't think that's the case. And I think the most important element here is you need to know your own style as an investor and what works for you. And I think you cannot change it based on our copiers' demands, because you will simply fail. Investing is a difficult area, and you should always replicate what works for you. And I always found as well, when I bought companies that someone else pitched me and maybe I wasn't convinced, these are usually the worst trades I've made.
Let's talk a little bit more about copiers then. I have a question here, which is who should copy you? But I should probably preface it by saying, other than wealthy European golfers in your four ball, who should copy you from the eToro ecosystem? Who should copy you that might be listening to this?
Sure. I mean, the lifestyle element is not a requirement. Although I have seen that people quite like it. I have an active Instagram with quite a big following, and I think I'm one of the most colorful PIs in that respect. And I think it's good. I think I found my niche, and some people will not maybe like it, but it's my style, and I'm happy that I have a core group where we both have a good laugh about it. And again, you are inviting me to very opulent lounge. We're not sitting in a bar and so on. So it's always good. I think who should copy me and shouldn't. I think everyone who wants a diversified portfolio should copy me, especially that I think you've alluded to that before. My portfolio is quite different to other people. I see a lot of PIs that are very close to Nasdaq composition, and then I would question the value add of that. As we discussed, I have a lot of stocks in London and Zurich and Germany and everywhere. So I think it's a very attractive value proposition to any portfolio to diversify it. And therefore, someone who just wants to invest in tech or crypto would probably be not someone who should copy me, because my strategy is different and it doesn't include that many hot tech sector that's been underperforming lately but has done very well in 2020.
So I think you've answered part of my next question. What role should you as a PI play in a copier portfolio?
Sure. So I think it could be one of the two roles. I think one role could be to provide more diversification. So you may be quite bullish on Nasdaq and maybe CopyJ or some other investors. You would benefit from the diversification, and my correlation with SPX is not that high, and I perform it quite strongly. It could also be for someone, a lot of people have done that, who want to go a little bit more into portfolio and wealth management. So I have a lot of people who tried and trade on their own. They found that I outperformed them. And because of my frequent communication, they trust me to manage the entirety of their portfolio. And because I look at risk-adjusted return all around the globe, this is a good portfolio to copy as the only one, because I move from value to tech, from US to London, from London to India. And, I've, as you've said, I have over 40 trades per week. So I will always move into the areas where I think the risk return is the highest. So it can be considered as the only copy in the portfolio, or it can be used as diversification.
I imagine that would be the case for the people that you bring in from outside. They're coming to copy you. They're not coming to build a team.
Exactly. I actually have seen in the last 6 months a big growth of, I don't know how I would call it, but let's say a professional, successful businessman, probably 50 to 100K, that puts 100% with me, because they find out that, if I'm averaging around 20%, which I will probably more, last year was 40, this year probably will be more than 20 as well. I'm sitting already at 18. They just find it a very useful and attractive way to manage their own money. So instead of keeping it in a saving account in a bank, they just, do what they do best. They earn money doing so, and then they let me manage their portfolio.
Yes, or perhaps the alternative for them is to have it with somebody who looks like you and sounds like you, but is charging them fees off the top.
Exactly. And not everyone is at the level of having a private banker, or wealth manager. So that usually starts above $1 million. So the fact, actually, most of my clients above 50,000 are extremely surprised they don't have to pay.
Yeah.
It almost is scary that they don't. There's something they find it, something is not correct, and they ask me how eToro is making money. How are you making money? They want to make sure to contribute. So I explained that obviously it's a lot about the volume. So eToro prefers, this 3 million or 30 million to have it on eToro than to have it at Interactive Brokers.
Is there a right way or a wrong way to copy you?
I think the wrong way would be to copy below 3 months. I think, and that's what I've seen, this growth in February and then copiers leaving in the last 3 months. You cannot just copy me and expect me to make 20% a month, even though I've done it twice in the last 15 months. It's a longer term, and I think everything below 3 months, it just doesn't make sense.
I think that's always the answer to that question. The wrong way to copy a PI is on a very short-term basis.
It could be, because unless you are maybe an FX swing trader, in this case, it could be a good time to be short, because every day you take a different FX position. But for stock investing, the horizon is usually in years, not in months. So for most PIs investing in stocks, it probably doesn't make sense to copy for a short term.
So if you were a copy trader, tell me about your approach. Tell me what your PI portfolio looks like.
That's very interesting. It depends on the goal of the portfolio, whether you want to just passively put everything or you want to be a little bit active. So let's take a little bit more active, which is maybe more interesting. And I have a lot of questions, this precise question, what should people do? And my answer is you're probably familiar with 80-20, the Pareto Principle. And I would put 80% into people like me or Jay to manage your money, and then learn with this 20%. And on top of that, I say treat this 20% as if you already lost it. So this removes a little bit of pressure on your performance and allows you to think a little bit more freely. If you think, okay, well, it's already gone, so you may as well take a position. So if you want to learn, that's what I advise.
If you're going to copy trade only, how many PIs would you have in your team?
Probably not too many. I think I would probably have about 3 maximum. I would have someone like me that's very well diversified, and you're happy with the risk reward, and then maybe have someone in tech, and then maybe have someone in crypto if you want to do that.
What other PI would you say you know the best on a personal level?
Probably 2 PIs that are in the program. One is Hugo Manenti. He has about 7,000 copies. I put a picture with him on. I think I put it on eToro as well. We had lunch in Barcelona, where he lives at the moment, not so long ago, and he's also coming from finance. So it's we have very common interests, and we discuss many stocks. And actually, for us, a lot of the things that happen on eToro is quite new and strange because it's very different from the world of finance, and some of the trades that others do, we would never do. So we have a
what sort of things?
Well, there are IPIs that would have maybe 40% of Tesla and 25% of Bitcoin in the portfolio. So that's totally unacceptable. People like Hugo and I would never have more than 5% in anything. And also a lot of people buy. I think people don't understand the notion of valuation on eToro. As I said, I love Apple. I spend a lot of money with Apple, but I don't hold a single share because it's just very expensive. So if I can buy Aston Martin that I know is extremely undervalued, it's just a better trade. It doesn't mean that Aston Martin is a better company than Apple. Actually, far from it. Aston Martin has debt. They have, they need to turn around the business, which they are doing well. Apple is, having so much cash. It's such a fantastic business. But you need to think about how many times your investment can multiply and what's the risk. And, I don't see the risk in Aston Martin on a 3-year horizon being lower than it is now, whereas Apple can be because it's already extremely high. So I think these trades we see a lot, people buying Tesla and Bitcoin and crypto is a good example. There's no intrinsic value of crypto, and people buy it. And why do they buy it? And they hope for the best based on what they read on Reddit, but they lost 44% yesterday in one day. That's something that professional investor would never do.
What changes would you like to see on eToro?
I would like to see more financial professionals on eToro, such as myself and Hugo, for instance. And if you look at our performances, you'll probably see very diversified portfolio with relatively very good return as well. And the importance of it is the security for the copier, because we'll probably perform similarly every year. Obviously, it depends on the market, but last year you could pick up more or less anything and you would do well. But in a more difficult market like this month, you see some of the PIs, even black stars, are sitting at minus 15%. Hugo and I are about 0. So it is about stock picking. It can be that the markets are going really down, but you are up. And if you have good companies that will do well, they have healthy balance sheet and a good prospect for the future, they would do well regardless of the market. So I think we should have more people like this because it will just provide better returns for the community. And if everyone is investing in tech and crypto, everyone will hurt, like we've actually seen this couple of months.
You keep looking down. Are there things that you wanted to say that I haven't asked?
I think a general comment maybe would be that people should be very grateful for the ability to copy PIs. And I'm not saying it because I'm a PI, but I'm saying it because it provides a very good access to professional return. That's how I see it. And you're doing an excellent job, Gavin, to kind of bring out more. And I think even during this interview, you bring out a little bit more of a personality of a PI as well, not just the statistics on the platform, which is great. And the fact that you can have hedge fund like returns for free is just really mind-boggling. So I think people should complain a bit less that they were not able to open this $50 position and they lost 50 cents on it, and appreciate more that they can actually manage their life savings in a responsible and predictable way. It's actually a phenomenal thing that eToro is allowing them to do. So I think people should be a little bit more cognizant of it. And yesterday I also tweeted about Cathie Woods on Bloomberg, because she's been doing extremely badly. She lost about 35% since mid-February. And, almost all of us, at my level and above at eToro are outperforming someone like Cathie. So, let's pause for a second and think about that. We're outperforming some of the rock stars of the industry, and we are fully transparent. And we probably, I have probably the same tools, but I think most of the other PIs, they're doing their own analysis, Googling and reading lots of articles. So, big kudos for them, and especially for those who are consistent year after year. And, they are being paid a fraction of what you would be paid as a professional fund manager. And, they have a difficult job also. In a fund, you probably will not do the communication with investors yourself. You'll have sales and marketing teams to do that for you. And here you need to do everything. So it's quite a complex job. And I think those who do it well, they deserve some respect. I think, especially when I see those comments that we talked about at the beginning, on Jay's feed, it's just so disrespectful. And, someone is down for a month, whereas they've been delivering, 100% a year. They're down 1 month, and they're getting very, very bad. And it's not fun, if you spend all your time and energy on it, and people just put you very much down. But it's a big part of being a PI. So learning to stomach those things and being able to manage that. It's a big part of being a PI, and for me was also a learning curve, because I learned to leave those things, just not comment. That was advice from eToro and from my copiers, and it's actually the best strategy for it. If you start touching it, it's just going to get worse. So
I think in time you will become more and more appreciated as your performance stretches out down the years. And I would like to sound a note of appreciation to you, Marcin, for joining us today. It's been great to have you on. Thank you so much.
Thanks, Gavin, and thanks for this opulent environment. It's been great.
Great chat with Marcin. I suspect we will see more of his ilk crossing over into the world of eToro and taking significant clientele with them. A very different approach to trying to attract copiers only from within the existing pool of copy traders. The weeks and months ahead are fast filling up with interesting guests for the pod, so there is plenty for us to look forward to. Some you may not know, and some you most definitely do. You can continue the conversation on Discord and Facebook, but that's all from me today. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. It's just generic chit chat. We don't know your individual circumstances, etc., and so forth.